Hey everyone, and welcome to this deep dive, where we're tackling a question we get all the time.
Okay.
How do I get started with investing in stocks? It can be pretty intimidating,
Right.
especially for beginners, so we're going to break it down
Absolutely.
into 7 clear steps to help you get started with confidence.
Sounds good.
Let's dive right in.
Yeah. So
Step 1.
step one is
What is it?
all about defining your goals.
Oh,
Before you even think about buying a stock,
okay.
you got to figure out what you're hoping to achieve by investing.
Right.
Are you saving for retirement? Do you want to buy a house someday?
Okay.
Maybe travel the world?
Yeah.
Whatever it is, having a clear why will keep you motivated
I see.
and help you choose the right investment strategies.
So it's like setting a destination before you start a road trip.
Exactly. And don't forget,
Yeah.
you can have multiple destinations.
Cool.
Think about both short-term goals, like maybe a new car,
Okay.
and long-term goals, like that comfortable retirement.
Got it. So we've got our financial GPS set.
Yeah.
What's next?
Next up is taking stock
Mm-hmm.
of your current financial situation.
Okay.
Before you start investing, you need to make sure your finances are in good shape.
Like,
It's kind of like checking under the hood of your car.
okay,
Before a road trip, you want to make sure everything is running smoothly.
gotcha.
So, first things first, you need an emergency fund.
Right.
Life throws unexpected expenses our way,
Yeah.
and you don't want to have to sell your investments at a loss just to cover those.
Yeah, that makes sense.
So, a financial safety net is crucial.
Okay.
Then, tackle any high-interest debt,
Oh, right.
especially credit cards.
Yep.
Those interest rates can really eat into your returns.
Makes sense. Got to clear those roadblocks, right?
Exactly. And finally,
Okay.
you need to create a budget that allows you to invest consistently.
Right.
Even small amounts invested regularly can grow significantly.
Because of that,
Compound growth?
compound growth, right?
Exactly. It's like a snowball rolling downhill.
Okay.
It gets bigger and bigger over time.
So slow and steady wins the race, right?
Yeah.
No need to go all in right away.
Absolutely. Now, step 3.
Okay, step 3.
This is all about
What is it?
understanding your risk tolerance.
Risk tolerance.
Yeah. How much risk are you comfortable with?
Hmm.
Because remember, stocks can be volatile.
Right.
They go up, they go down.
Up and down, yeah.
And you need to be okay
With
with...
those fluctuations.
Yeah. Now, your risk tolerance,
Okay.
along with your time horizon,
Yeah.
will determine what kind of stocks are right for you.
I see. So like,
Someone saving for retirement 30 years from now,
right.
they might be more comfortable with riskier investments.
Okay.
But someone saving for a down payment in a few years
Got it.
might want to stick to more conservative options.
Makes sense. So it's about knowing yourself as an investor, right?
Yeah, exactly. Once you have a good grasp
Right.
of your goals,
Hmm.
your budget,
Yeah.
and your risk tolerance,
Got it.
then it's time to choose your brokerage account.
So that's where we actually buy and sell stocks. Right.
Exactly. It's your home base for investing.
So we're setting up camp before heading out into that stock market wilderness.
You got it. And there are different types of brokerage accounts out there.
Oh, okay. Like what?
You've got traditional brokerage accounts,
Hmm.
robo-advisors,
Okay.
retirement accounts like 401ks and Roth IRAs. Each one has its own pros and cons.
This is like choosing the right vehicle for our road trip.
Yeah, exactly.
Right.
Do you want a sporty convertible
Hmm.
or a reliable SUV?
I think I'd go for the SUV.
Well, with investing, you got to consider things like
Okay.
how hands-on do you want to be?
Hmm.
Do you want to pick your own stocks?
Okay.
Or do you prefer someone to manage your investments for you?
So it's like choosing between a self-guided tour and a guided tour.
Precisely.
Yeah.
And you also need to compare
What's that?
fees,
Okay.
minimums,
Yeah.
and features offered by different platforms.
Makes sense. Got to do your research before committing.
Absolutely. Once you've chosen your platform,
All right.
it's time to fund your account.
Okay, so this is where the rubber meets the road.
Yeah, you got to put some fuel in the tank.
Got it.
Bank transfers are the most common way to fund your account.
Hmm.
But some brokers might accept checks or transfers from other accounts.
Okay, so just link up your bank and get those funds flowing.
Right. And here's a pro tip.
Okay, I love pro tips.
Consider setting up automatic contributions.
Automatic contribution.
Yeah, it's called dollar cost averaging.
Dollar cost averaging.
And it helps you invest consistently over time,
Okay.
regardless of market fluctuations.
So it's like setting your investing on cruise control.
Exactly. It takes the emotion out of it
Mm.
and helps you avoid making impulsive decisions.
So we've set our goals,
Yeah.
checked our finances,
Mm-hmm.
assessed our risk tolerance.
Yep.
chosen our platform,
Right.
funded our account.
We are ready to go.
Phew. Are we finally ready to pick some stocks?
Almost. There's one more crucial step.
Okay, what's that?
Before we unleash you into the stock market jungle,
Ooh, I'm intrigued. Tell me more.
it's time to explore
Okay.
the different types of stocks out there.
Oh, okay.
We're going on a stock safari.
The stock safari. I love it. What kind of creatures are we going to encounter?
Well, first up,
Yeah.
we have the blue chip stocks.
Blue chip stocks. Those sound familiar.
These are like the elephants of the stock market.
Oh, okay.
Large, well-established companies,
Right.
like
yeah.
household names, and probably use their products every day.
Okay.
They're generally considered to be stable and reliable.
Makes sense. They've been around forever.
Exactly. But they might not grow as fast as some of the younger companies.
I see. So steady, but not necessarily spectacular growth.
Right. Now, next up we have
What is it?
dividend stocks.
Dividend stocks. Those sound interesting.
These are the beauties that pay you regularly.
They pay you.
Yep. Just for owning them.
Wow. That's like getting a bonus just for being a shareholder.
It is. They're great for generating a steady income stream.
I like the sound of that. Passive income is always welcome.
Now, for those who are a bit more adventurous,
Okay.
we have growth stocks.
Growth stocks.
These are the companies that are expected to grow
Okay.
at an above-average rate.
Right.
They can be riskier,
Oh, okay.
but they also have the potential for higher returns.
So high risk, high reward.
Exactly. They're more suited for long-term investors who are comfortable with a bit of volatility.
Okay, got it.
Now, let's not forget about
Right.
our more conservative friends, the defensive stocks.
Defensive stocks. What are those?
These are the companies that tend to hold up well,
Okay.
even when the economy is struggling.
All right.
Think utilities, consumer staples,
Sure.
things people always need.
Got it. Essential businesses.
Exactly. They're like the tortoises of the stock market.
Slow and steady wins the race.
Sometimes. Now, finally, we have
The ETFs.
ETFs. I've heard of those. These are exchange-traded funds.
Yeah.
They're like baskets of stocks.
Baskets of stocks.
Yeah. So instead of buying individual stocks,
Right.
you're buying a diversified portfolio in one go.
So instant diversification.
Exactly. And they come in all shapes and sizes.
I see. So there's an ETF for pretty much any investment strategy.
You got it. Now, remember,
Right.
when you're just starting out, it's always best to start conservatively.
Okay.
You can always get more adventurous as you gain more experience.
So baby steps. Right. Don't try to run before you can walk.
Exactly. And one last thing before we move on to some expert advice.
Okay, I'm all ears.
Never stop learning.
Bro.
The stock market is constantly changing,
Yeah.
so continuous learning is key to success.
So even after we've mastered these 7 steps, the education doesn't end there.
Nope. It's a lifelong journey.
I see. So always be curious, always be learning.
Precisely. Read books, articles,
Okay.
follow financial news,
Right.
and maybe even try out a stock simulator.
A stock simulator. What's that?
It's a way to practice investing without risking real money.
Oh, that sounds like a good idea, especially for beginners.
It is. It helps you get a feel for the market
Hmm.
and test out different strategies.
Makes sense. So we've covered a lot of ground already.
We have.
Starting with defining our goals.
Yep.
Checking our finances. Assessing our risk tolerance.
Right.
Choosing a platform.
Yeah.
Funding our account.
Okay.
And exploring the different types of stocks.
We're making progress.
We are. So what's next?
Well, now that we have a good foundation,
Okay.
let's dive into some specific expert advice.
Oh, perfect. I was just about to ask about that.
All right. So for those who are just starting out, one of the best ways to dip your toes into the stock market
Okay.
is with index funds.
Index funds.
Yeah. Have you heard of those?
I have, but I'm not really sure what they are.
Well, they're basically baskets of stocks.
Like those ETFs we talked about.
Similar, but
Yeah.
index funds, they track a specific market index,
A market index.
like the S&P 500.
Okay.
So instead of buying individual stocks,
Right.
you're buying a tiny piece of all the companies
Okay.
in that index.
I see. So it's like instant diversification again.
Exactly. And the S&P 500,
Yeah.
it's a great starting point
Yeah.
because it has a long history of solid returns.
So it's a relatively safe bet.
Well, no investment is completely risk-free,
Right.
but historically,
Yeah.
the S&P 500 has performed well over the long term.
Makes sense. So index funds are a good way to get started.
Yeah. And if you're feeling a little risk-averse, you might also consider
Okay.
low volatility stocks.
Low volatility stocks.
Yeah. These are stocks that
It was-
tend to fluctuate less
Okay.
than the overall market.
So they're a bit more stable.
Exactly.
Right.
They might not have the same growth potential
Yeah.
as some of the other stocks,
Right.
but they can provide a smoother ride.
Makes sense. So those are good for investors who are a bit more cautious.
Absolutely. And speaking of cautious investors,
Um,
there are also
with that
quality factor ETFs.
quality factor ETFs. Now those sound interesting.
These are ETFs that focus on companies
Okay.
with strong financial health. They look at things like
Like what?
low debt levels,
Mm.
consistent earnings growth,
Okay.
and high returns on equity.
So they're basically picking the cream of the crop.
You could say that. They're looking for companies that are well managed
Okay.
and have a proven track record of success.
Makes sense. So these ETFs are doing the heavy lifting for you.
Yeah, they're doing a lot of the research and analysis,
No,
so
they-
you don't have to.
I like the sound of that.
Yeah.
Less work for me.
Now, before we move on to some other investing strategies,
Okay.
I want to emphasize something really important.
Right. I'm listening.
Investing is a long-term game.
Okay. Patience is key.
Okay, let's do. Don't expect to get rich quick.
Right.
The stock market will have its ups and downs.
Hmm.
But if you stay focused on your goals,
Okay.
diversify your portfolio,
Right.
and continue to learn,
Got it.
you'll be well on your way to achieving your financial aspirations.
So it's about building a solid foundation for the future,
Hmm.
not chasing quick profits.
Precisely. Now, one final thought to leave you with.
Okay.
As you continue your investing journey,
Yeah.
consider aligning your investments
Mhm.
with causes you care about.
Wait, you mean like investing in companies that are doing good for the world?
Exactly. It's called ESG investing.
ESG investing.
Yeah, it stands for environmental,
Okay.
social,
Yeah.
and governance.
Okay.
And it's all about investing in companies
Right.
that are committed to sustainability,
Okay.
social responsibility,
Mhm.
and ethical corporate governance.
So companies that are not only profitable, but also making a positive impact.
Precisely. It's a way to put your money where your heart is.
That's incredible. I never realized investing could be so multifaceted.
It is. It's not just about numbers and charts. It's about making conscious choices about where your money goes
Yeah.
and what kind of impact you want to have on the world.
I love that.
And as you learn more about investing,
Well.
you'll discover that there are so many different ways
Mhm.
to align your investments
Okay.
with your values.
Makes sense. So it's all about finding what works best for you.
Exactly.
I love that. So it's not just about making money, but also making a difference.
Exactly.
Yeah.
And that's a powerful thing.
It is. Now that we've covered the basics,
Yeah.
let's dive into some expert advice for our beginner investors.
Okay. Sounds good. What do you want to know?
Well, for starters,
Hmm.
what are some good investment strategies for someone who's just starting out?
That's a great question. One of the best ways to get started
Okay.
is with index funds.
Oh, yeah, index funds. We touched on those earlier.
We did. And for good reason.
Okay, why is that?
Well, index funds offer instant diversification.
Right.
And instead of picking individual stocks, you're buying a basket of stocks that tracks a specific market index.
Like the S&P 500.
Exactly. The S&P 500 is a great option for beginners
Okay, why?
because it includes 500 of the largest publicly traded companies in the U.S.
Oh, I see.
So you're getting exposure to a wide range of industries.
Makes sense. And it's considered a pretty safe bet, right?
Well, no investment is completely risk-free,
Sure.
but the S&P 500 has a long history of solid returns.
So it's a good starting point for someone who's new to investing.
Absolutely. And another tip,
Okay.
especially if you're a little risk-averse,
Mm.
is to look for low volatility stocks.
Low volatility. What does that mean?
It means they tend to fluctuate less
Okay.
than the overall market.
So they're a bit more stable.
Exactly. They might not have the same growth potential
Mhm.
as some of the more volatile stocks,
Right.
but they can provide a smoother ride for your portfolio.
I like that idea. A smoother ride.
Yeah, and you can find low volatility stocks
Oh.
in sectors like utilities,
Okay, great.
consumer staples.
Right. Things people always need.
Exactly. They're
Yeah.
essential businesses.
Makes sense. Now, what about those quality factor ETFs you mentioned?
Ah, yes, those are a good option too.
Okay. Tell me more.
They focus on companies with strong financial health.
Okay.
So they're looking for businesses with low debt levels,
Mm.
consistent earnings growth,
Okay.
and high returns on equity.
So basically companies that are well managed and financially sound.
You got it. They're like the all-star team of the investing world.
Okay. So index funds for diversification, low volatility stocks for stability, and quality factor ETFs for strong companies.
You're getting it. And remember,
Yeah.
it's always a good idea to do your research
Right.
before investing in any stock or ETF.
Absolutely. Now, before we wrap up this deep dive,
Mm.
is there anything else you think our listeners should keep in mind?
Yes, one very important thing.
Okay, what is it?
Investing is a marathon, not a sprint.
Oh, I've heard that before.
And it's true. Don't get discouraged
Right.
if you don't see immediate results. It takes time to build wealth.
Okay.
And the stock market will always have its ups and downs.
Right, those fluctuations we talked about earlier.
Exactly. But if you stay focused on your goals,
Right.
diversify your portfolio, and continue to learn,
Yeah.
you'll be well on your way to achieving your financial dreams.
So patience, diversification, and continuous learning are key.
You got it. And don't forget
Okay.
to enjoy the journey.
The journey.
Yeah. Investing shouldn't feel like a chore.
Right.
It should be exciting and empowering.
I'm starting to feel that way already.
Great. Now, one final thought.
Okay, I'm all ears.
As you continue your investing journey,
Mm-hmm.
think about aligning your investments
Okay.
with causes you care about.
Oh, right. ESG investing.
Exactly. It's a way to make a positive impact on the world while also growing your wealth.
I love that idea. It's like a win-win.
It is, and there are so many different ways to do it.
Oh, okay, like what?
You can invest in companies that are focused on
Okay.
renewable energy.
Sustainable agriculture,
Right.
social justice,
Yeah.
or any other cause that's close to your heart.
So it's all about finding investments that align with your values.
Exactly. And it's becoming increasingly popular.
Really?
Yeah. More and more investors
Mm.
are looking for ways to make a difference with their money.
I think that's amazing.
It is. And it's a trend I'm really excited about.
Yeah, too.
Yeah.
It's like we're not just investing in companies. We're investing in a better future.
Exactly. And that's a powerful thing.
Yeah, it really is inspiring to see how investing can be used for good.
It is. And it's just one of the many facets of investing that we've explored today.
Right. We've covered so much ground.
We have, from defining your goals to aligning your investments with your values.
It's like we've gone from feeling lost in the stock market wilderness to having a clear path forward.
Exactly. And remember,
Yeah.
it's a journey, not a destination.
Right. So enjoy the ride.
Exactly.
Yeah.
And don't be afraid to ask for help along the way. Oh, absolutely. There are so many resources available.
Yeah, like financial advisors, books, websites, even podcasts like this one.
Right. We're all here to help you succeed.
We are. So as we wrap up this deep dive,
Oh.
let's recap those 7 steps.
All right. Step 1, define your goals.
2, check your finances.
3, assess your risk tolerance.
4, choose your platform.
5, fund your account.
6, explore different types of stocks.
And 7, never stop learning.
You got it. Those 7 steps, they're your roadmap to success in the stock market.
And remember, it's all about taking that first step.
Right.
And then continuing to learn and grow as you go.
Exactly. And don't forget,
Don't-
diversification is key.
Right. Don't put all your eggs in one basket.
And consider dollar cost averaging.
To smooth out those market fluctuations.
You got it. And if you're feeling a little risk averse,
Yeah.
look for those low volatility stocks.
Right. Those steady eddies of the stock market.
Now, before we say goodbye,
Okay.
I want to leave you with one final thought.
All right. I'm listening.
Investing is a powerful tool. It can help you achieve your financial goals,
Yeah.
build wealth, and even make a positive impact on the world.
Right. And it's more accessible than ever before.
It is. So what are you waiting for?
Yeah. Start your investing journey today.
You won't regret it.
I have a feeling our listeners are feeling pretty inspired right now.
I hope so. Because knowledge is power.
Absolutely. And we've given them a lot to think about today.
We have. And remember,
Yeah,
we're always here to help.
we are. So if you have any questions or need some guidance,
Yeah.
don't hesitate to reach out.
We're a community here.
We are.
Yeah.
Now that's a wrap on our stock investing deep dive. Thanks for joining us.
It's been a pleasure.
And happy investing, everyone.
Happy investing.